In this lesson, we'll explore the basic options you have for defining accounts in Plantastic. Of all the options you have when creating a scenario, the proper planning of investment accounts is often the most effective way you can help your clients to create an income plan that will last through their lifetimes. In Plantastic, there are 4 different account types that you can define for your clients: managed stock accounts, annuities or self-funded pensions, fixed rate accounts, and bank accounts. Your clients will often have existing managed stock accounts and bank accounts, but many of them won't know the options and benefits offered by the other account types. Plantastic can help you define the account types to use in your clients' plans and create scenarios that explore the various ways in which those accounts can be combined. To help you decide which account type to use, remember these basics. The rate of return for managed stock accounts and annuity accounts can be affected by stock market performance and bear market simulations. Bank accounts and fixed rate accounts cannot. The yearly income from annuities and fixed rate accounts are fixed for each year. Income from managed stock accounts and bank accounts is automatically calculated based on the yearly shortfall between expenses and income from all other sources. There are many different options that can be selected for each account type. Some of these attributes are common to all the account types, and some are specific to certain account types. In this lesson, we'll start with the common options, then explore the more specialized options in part 2 of this lesson. Begin by giving the account a unique name to identify it in the plan printouts and calculations tables. The name should be short to keep the calculation column width small but descriptive. Examples include Sam's IRA or joint savings. The account owner must be set to one of the clients in your plan. For accounts that contain pre-tax investments, selecting the correct owner is important, as that will affect the required minimum distribution calculations. For bank accounts and other after-tax investment accounts, the owner must be selected, but it does not impact the plan calculations. The opening balance attribute defines the money in the account in the year it will be opened. If the account already exists, enter its current balance in this field. The display sequence is used to define the order in which the account is displayed in the calculations table for the plan. Most planners group accounts by their account type, but you can set the order to any sequence you prefer. The year opened attribute defines the year when the initial investment is made and when interest starts accruing. In most cases, the year opened will be the same as the start year for the plan, even if the account was opened in earlier years. But in some cases, you may wish to defer the start of an account to a later year, perhaps to account for an expected inheritance or trust fund. The year closed attribute defines when the account will be closed. After the year you specify, the account will no longer earn interest or provide income for the plan. In most cases, you can leave this attribute empty and the account will remain open for the duration of the plan. However, if you specify a value for this parameter, the account balance will drop to 0 in the following years. If a balance remains at the end of the account lifetime, you should create another account that begins the following year and start that account with the funds from the closed account. Don't forget to adjust the transfer amount for taxes if the transfer will be taxable. The first income year and last income year attributes define when each account is available to provide income to the plan. For some accounts, such as annuities, you will usually have the account accrue earnings for a length of time and then start taking income from the account later in the plan. In other cases, you may wish to take money out in the early years, then switch to the other accounts for income in later years. If the account will pay income for the client's lifetime, leave the last income year blank and it will automatically set to the last year of the plan. The taxable attribute determines if the money withdrawn from or paid by the account will be taxable. If this option is turned on, Plantastic will calculate the tax on the income from the account based on the income tax rates you specify for the scenario. The qualified attribute indicates that the balance in the account will be used to calculate the owner's required minimum distribution, or RMD, each year of the plan after the owner reaches 70 or 72. This option should be turned on if the account contains pre-tax money. The percentage to survivor attribute defines the percentage of the account that will roll over to the surviving spouse following the account owner's death. This parameter is only used for fixed rate accounts and annuities. For stock and bank accounts, the ownership always rolls over to the surviving spouse. The rate of return parameter is used to estimate the rate at which the account is expected to grow. Keep in mind that this is a hypothetical rate of return based on past performance and investment strategy and is not guaranteed. Fixed rate accounts use this attribute to simulate interest-only accounts. Annuity accounts use this parameter to estimate the cash value of the annuity, but have no impact on the income from the account. The rate of return is used throughout the account lifetimes except during years of simulated bear markets, where the historical stock market rates are used.